I'm Dan Fitzpatrick at stockmarketmentor.com on Saturday, December 15th. 16 days away from 2013. And I want to look at Facebook. Look, this has been trading sideways for quite a while. This selling on Friday was really because of a lockup expiration. A lot of new shares came on the market, and I think what was happening was, you're going to get all these folks who are selling. They want to take their money in 2012 rather than 2013 and pay the lower taxes, because all these folks are going to be in the highest tax bracket because of the money that they're making on the stock. So where does that lead us? Okay, I think ultimately, no matter how far Facebook falls, and it could actually start back up on Monday, who knows? But I think when it falls, the lower it falls, the better buying opportunity there is. I'm not a fan, as most know, of the Facebook product. I think it's a little creepy. But there's like 1 billion people who disagree with me, and that's fine. I'm looking at the stock here, not the company. And this has come through quite a long base here. There are supposedly 1 billion accounts, though I don't think they're all new accounts. In other words, I think there are some duplicates there. But does it really matter? No, it doesn't really matter. Bottom line is they got a lot of users. They got a lot of smart people working there. And they will find a way. I think they are finding a way to monetize this, even with the with the mobile market. And so I think the market's starting to anticipate this. What I would suggest doing, if the stock starts breaking out and trading above, say, 28.50, then I think you got to buy the stock, because the only reason it's trading up that high is if it's going higher, if it's completing this base. But if the stock pulls back, then let it pull back. And wait for the first up day. Wait for the first day where the close is higher than the open, and then use that intraday low as a reference for your stop, and then put your stop just slightly below that level, wherever it is. That way you're able to buy on the dip without taking excessive risk. In other words, you wait for some kind of a bounce, you buy it, you put your stop in, and then if the stock reverses further, you're taking a small loss, which last time I checked is much better than taking a big loss. So anyway, those are my thoughts on Facebook. Members, get over to the weekend update. I got a lot of stuff to cover, particularly financials in the second video. Also, Option Market Mentor members, we've got an update on our trades and a little bit of an outlook for next week. So I'll see you next time. Oh, by the way, one other thing I almost forgot, but I didn't forget. I remembered. I'm going to be on Squawk Box on Monday at 11 a.m. Eastern, 8 o'clock Pacific time. So I hope you'll check that out. I'm talking about Apple and research in motion.